Okay, so when I first saw Zedge's name pop up for this deep dive, I have to admit, I thought, Zedge, the mobile wallpaper company. How are they relevant to the bleeding edge of AI?
Right. It seems like an unlikely connection at first glance.
Exactly. But then I started digging into their latest earnings, and honestly, my jaw actually dropped a bit.
Ah, so there's more to the story.
Way more. Today, we're exploring what's happening at the real cutting edge of the AI revolution, but maybe from some angles you might not expect.
Ah, yeah, not just the usual big tech headlines.
Definitely not. We're looking beyond the flashy stuff, more at the behind-the-scenes engines, the things really powering it all.
Sounds good.
So our mission today, basically, is to unpack the recent Q3 fiscal 2025 earnings from Zedge, Inc. Yeah, that mobile personalization company.
Okay.
And then we're going to pivot. We'll look at a much broader, often overlooked investment angle tied to AI's, well, it's truly voracious energy appetite. We've got insights from a pretty provocative investment research piece on that.
That's a fascinating juxtaposition. These two sources, they really offer incredibly different lenses on the whole AI boom, don't they?
Totally different.
You've got Zedge, like you said, a consumer app company, directly integrating AI into its products, its operations. It shows how, established players are adapting.
Right.
And then the other source, it pulls back the curtain on the critical infrastructure, the stuff AI absolutely relies on. It highlights these massive, often hidden challenges, but also the opportunities.
Hidden is the key word there.
Definitely. So our goal here is to give you a comprehensive, kind of nuanced understanding of both sides. We want to equip you with some surprising facts, some key takeaways, so you can connect the dots yourself.
Okay, let's do it. Let's kick off with that Zedge headline. It's from their Q3 fiscal 2025 earnings call. That was June 12th, 2025. The big news?
They're back to revenue growth.
Exactly. A return to revenue growth and GAAP profitability, which is pretty impressive given what they called some pretty significant market challenges.
It is. And what's really insightful is how they managed that turnaround. Let's look at the specifics. Total revenue, it was up 1.3% to $7.8 million. Not huge, but positive.
Okay.
But adjusted EBITDA, that's a key measure of operating performance. Basically, that jumped 46% year over year, came in at $1.2 million.
Wow, 46%. That's significant.
It really is. And they generated $800,000 in free cash flow. Now, get this. That figure includes about $1 million in one-time payments, things like restructuring costs, acquisition bonuses.
So even with those one-offs, they still generated cash.
Right, and their balance sheet looks really strong. They ended the quarter with $20.4 million in cash and zero debt.
Zero debt. Nice.
Yeah, and that's even after buying back, 219,000 shares for about $530,000.
Yeah.
So yeah, GAAP profitability means they're firmly in the black by standard accounting. It really speaks to their strategy working.
Those numbers are definitely compelling. But the real story, the why behind it all, I think it's kind of a masterclass in strategic maneuvering.
How?
Well, they found $4 million in annualized gross cost savings. That came from a global restructuring. Plus, they really cut back on discretionary spending, especially marketing for their Guru Shots app.
Ah, okay. So trimming the fat?
Exactly. It feels like they surgically cut back in less productive areas to reallocate resources to places with higher yield. Very focused.
And you have to remember the market context they were operating in. It wasn't exactly smooth sailing.
No.
No, the ad market faced disruption early in the quarter. Remember, TikTok was absent from the U.S. until mid-February. That definitely hit Zedge's Q3 revenue initially.
Ah, right. I forgot about that timing.
But then when TikTok returned, it actually boosted programmatic advertising overall. And that benefited Zedge because, well, they act as a user acquisition platform for companies like TikTok.
Interesting. So a bit of a roller coaster there.
A bit, yeah. Plus, there was some tariff-related uncertainty creating volatility, and they expected softness at Guru Shots anyway because they deliberately pulled back on user acquisition there to focus on developing Guru Shots 2.0.
Okay, so cost cuts were part one. But here's where it gets really interesting for me. Their strategic pivot toward higher lifetime value users, LTV.
Right. That's crucial. It wasn't just about cutting. It was about reshaping the user base.
Precisely. For more sustainable growth, their Zedge Plus subscriber base, it grew to an all-time high, nearly 900,000 users. That's a massive 37% jump year over year.
37%.
And that directly drove a 13% growth in their subscription revenue. But wait, it gets better. Deferred revenue, which is mostly, future recurring subscription money hit $5 million. That's up an incredible 83% year over year.
83%. Wow, explain that a bit more.
So think of it like this. People are paying up front for these lifetime plans. Zedge then recognizes that revenue steadily over 30 months.
Ah, so it smooths out the income. Guaranteed revenue coming in.
Exactly. Guaranteed income. And the best part, it's recognized at 100% gross margins, essentially pure profit flowing from those prepaid subs.
Okay, that's a very healthy sign.
Right. Plus, their Zedge premium revenue more than doubled.
Yeah.
They boosted that by expanding to web users, seeing more use of their Paint.ai image generator, and continued demand for those cool 3D parallax wallpapers.
And what really stands out is how those financial shifts connect directly to the user metrics. You mentioned LTV.
Yeah.
Well, while their overall monthly active users, MAU, actually declined year over year.
Oh, okay. That sounds potentially bad.
Not necessarily, because it was a deliberate and strategic mix shift. They consciously move away from lower LTV users globally, focusing instead on higher LTV users in well-developed markets.
I see. Quality over quantity.
Precisely. And that focus led directly to their average revenue per monthly active user, ARPMU, increasing by a really significant 33% year over year. It hit $0.10.
33% jump in revenue per user?
Uh-huh.
That's a clear sign they're monetizing better.
Exactly. More efficient monetization of each user they have. And it's also worth noting, they said user metrics in those key, well-developed economies have started to stabilize now, which reinforces that their product and monetization strategies are working.
That shift to high LTV users, it sounds brilliant on paper, but was it really that smooth? I mean, were there significant churn issues with the lower LTV users they were kind of pushing away? Any real growing pains mentioned?
No. The emphasis on the earnings call was very much on the deliberate nature of the shift. It suggests they basically accepted some MAU decline as a necessary trade-off, for a healthier, more profitable user base in the long run.
Okay, so a calculated risk.
Seems like it.
Yeah.
They're clearly prioritizing that ARPMU growth over just the raw user numbers now. It suggests they managed the transition pretty strategically. Zedge's current success is one thing, but their real bet on the future and where AI truly comes alive for them is really embedded in their forward-looking initiatives.
Right, let's dig into dataseeds.ai. That sounds like a big piece of the puzzle.
It really does.
So tell us about dataseeds.ai. What exactly is it, and what does it mean for their, long-term vision?
Okay, so dataseeds.ai is a newly launched B2B content marketplace, business to business.
Right.
Its purpose is to supply enterprise customers with data sets for AI training. These can be on-demand or off-the-shelf data sets. Initially, they're focusing on images, but images enriched with really detailed metadata.
Okay, so not just pictures, but pictures with lots of descriptive info. Why is that important?
Because that metadata is crucial for training AI models effectively. And they're leveraging Zedge's huge existing library, over 30 million rights-cleared images, plus their community of photographers and designers, and their existing marketplace tech.
Makes sense? Using what they already have.
Exactly. And they've already signed an agreement with a, quote, leading global AI technology company. That provides some pretty strong validation that there's a real market need here.
Any examples of how it works?
Yeah, they gave a fascinating one in the Q&A. Imagine a company trying to teach an AI how light interacts with objects like rendering shadows accurately. Dataseeds.ai could help them by generating huge volumes of very specific imagery tailored exactly for that complex training need.
Wow. So it's not just selling stock photos. It's providing highly curated, almost custom data for AI development.
Precisely. That's the key difference.
Okay, that's a huge validation, signing a major AI player. But for you, the average Zedge user, what does this AI focus mean?
Well, get ready for their upcoming AI audio generator.
Audio generator.
Yeah, it's part of their Paint Gen AI creation suite. It'll let users generate custom ringtones, notification sounds, just using simple text prompts.
Seriously, like type funky robot alert sound, and it makes one.
That's the idea. They're positioning this as a major milestone in their AI roadmap. It puts them among the first consumer platforms out there enabling user-generated audio content at scale like this.
That actually sounds pretty cool. It really solidifies their leadership in mobile personalization, but with an AI twist.
Definitely. And beyond the audio generator, they mentioned other things too. Emotipedia is stable, and they're launching digital stickers for World Emoji Day in July. That's a new content type for them.
Hmm.
They're still working on GuruShots 2.0 ideas to drive standalone growth, and maybe even use that community to generate content for dataseeds.ai.
Interesting synergy there.
Could be. Overall, Zedge laid out 5 core strategic priorities for the rest of this calendar year. It's AI innovation everywhere, empowering their creator community, user and subscription growth, focusing on those high-value users, developing GuruShots 2.0, and importantly, B2B expansion by scaling up dataseeds.ai.
So a very clear plan. They're really leveraging AI to reshape the whole business.
Seems that way. Very comprehensive.
Okay, so we've just explored how Zedge is directly weaving AI into its products, its operations. A really savvy pivot from, basic mobile personalization to enterprise data and AI content creation.
Yeah, quite the evolution.
But now let's transition. Let's move from that direct AI involvement to a broader and frankly absolutely essential aspect of the AI boom that I think often gets overlooked.
The power demands.
The massive, truly staggering energy demands.
Yeah, what's truly critical here and kind of alarming is this looming crisis of AI's energy consumption.
Right.
Our source for this next part, they flat out assert that AI is, quote, pushing global power grids to the brink.
To the brink. Wow.
Yeah, and that each big data center powering these large language models consumes as much energy as a small city.
A small city, that's hard to even fathom.
It is, and this isn't just speculation. You hear it from top figures. Sam Altman, OpenAI's founder, he warns the future of AI depends on an energy breakthrough.
An energy breakthrough needed. Okay.
And Elon Musk, never one to mince words, was even more blunt. He apparently stated AI will run out of electricity by next year.
By next year. Okay, that sounds maybe hyperbolic, but the point stands.
Exactly. Call it hyperbole if you want, but the underlying challenge is incredibly real. It could genuinely bottleneck this entire AI supercycle if we don't figure out the power situation.
Okay, so this sounds like a colossal problem, but like most big problems, it probably creates an incredible opportunity for the right kind of player, right?
That's the angle the source takes. It describes what it calls the ultimate backdoor play for AI, an overlooked company that doesn't build the AI itself.
But powers it.
Exactly, it powers it.
Okay, tell me more about this unnamed company. What makes it so special, according to this research?
Well, this company, as described, seems to have some incredibly unique and critical characteristics. The real insight here is its strategic positioning right at the nexus of several huge macro tailwinds.
Okay, like what?
First, it apparently owns essential nuclear energy infrastructure assets. That puts it right at the heart of what the source calls America's next-generation power strategy.
Nuclear. Interesting, okay.
Second, it's highlighted as one of the only global companies capable of executing these really large-scale, complex EPC projects.
EPC.
Engineering, procurement, and construction across various energy and industrial infrastructures. So basically, they can handle massive projects from the blueprint stage, sourcing everything right through to the final build.
So end-to-end capability for huge projects.
Right. Very few companies worldwide can apparently do that full spectrum, making them kind of indispensable for these complex, large-scale energy and industrial builds.
Okay, what else?
Furthermore, it plays a pivotal role in U.S. LNG exportation liquefied natural gas. It collects fees under what the source describes as President Trump's renewed America First energy doctrine. Now remember, we're just reporting what the source claims here.
Understood. Just relaying the source's perspective on the policy connection.
Exactly. And importantly, it's also positioned to rebuild and retrofit facilities as, again, according to the source, Trump's proposed tariffs push American manufacturers to bring their operations back home. Onshoring.
Ah, the onshoring trend.
Right. So the source emphasizes that this company, quote, ties it all together. AI's energy needs, the broader energy transition, potential tariff impacts, and the onshoring movement.
Wow.
It's positioned as a foundational pick-and-shovel play, but for the entire future of industrial and technological power infrastructure.
That's a powerful confluence of trends. This unnamed company sounds almost too perfectly positioned. Did the research piece mention any potential downsides, competitive threats, anything that might challenge this seemingly foolproof setup?
That's a fair question. The source piece itself focuses very heavily on the strengths and the opportunity. It doesn't explicitly detail specific risks for this company. However, the inherent challenges in any large-scale infrastructure project, things like regulatory hurdles, potential project delays, shifts in political winds,
Yeah.
those are always present for any company in this space.
Sure. The usual suspects for big infrastructure.
Right. But the source strongly emphasizes this company's unique capabilities and its sort of entrenched position, suggesting these factors might mitigate many of those common risks.
Okay. And financially, how does it stack up?
Financially, it sounds exceptionally strong. The company is described as completely debt-free.
Debt-free in this sector.
I know. And holding a war chest of cash apparently equal to nearly one-third of its entire market cap.
A war chest. That provides incredible flexibility, especially now.
Absolutely. It also apparently owns a huge equity stake in another company described as a red-hot AI play. So that gives investors some indirect exposure to additional AI growth, too.
Interesting diversification.
And here's the kicker, according to the source. If you exclude the cash in those investments, the company is reportedly trading at less than 7 times earnings.
Less than 7 times earnings. For a company tied into AI infrastructure, nuclear, LNG, onshoring, that seems.
Absurdly undervalued is the term the source uses.
Yeah, that valuation does sound incredibly cheap if all those connections hold true. Significant potential upside if the market catches on.
That's clearly the argument being made.
Okay, so let's try and bring these two narratives together for you, our listener. On one hand, we've got Zedge, innovating, creating AI content, direct consumer experiences, showing how a traditional app can adapt and really thrive in this new landscape.
Right, tackling it from the content and user experience side.
And then on the other hand, we have this unnamed company busy building the indispensable energy backbone, the critical industrial infrastructure that, frankly, allows AI to even exist and scale up.
Exactly. These two companies, they're vastly different in their operations, obviously,
Right.
but they represent essential and actually quite complementary components of this whole AI supercycle.
Complementary how?
Well, Zedge is innovating on the data side, the user experience side. It's adapting its product, monetizing its users more efficiently, focusing on that high-value engagement we talked about.
Right.
Meanwhile, this other company is enabling the fundamental power needs. It's tackling the massive energy demands of data centers, building out critical infrastructure. You could say one creates the AI content and experiences.
And the other powers the engine that runs it all.
Precisely. You need both for the ecosystem to function and grow.
Yeah. This really emphasizes that understanding of the whole AI landscape means looking beyond just the obvious, the hype stocks that grab all the headlines.
Absolutely.
It means you really have to dig into the foundational layers, the strategic plays, whether that's Zedge's smart pivot to high-value users and B2B data, or whether it's securing critical energy infrastructure like this other company seems to be doing.
Yeah.
And for you, the listener, understanding these different kinds of shifts, these different layers, it isn't just about investing, necessarily. It's about seeing the entire hidden ecosystem, how AI actually works, how it sustains itself, and maybe where the most enduring opportunities might truly lie.
Well put. So, just to recap briefly, we've explored Zedge's really smart pivot back to profitability, their strategic AI integrations from image generation with Paint.ai to this new dataseeds.ai marketplace and that upcoming AI audio generator. Lots happening there.
Yeah, a company reinventing itself with AI.
Definitely. And crucially, we've also highlighted the critical, often unseen role of energy infrastructure in this whole AI boom. We looked at the immense power demands and the kind of unique companies, like the unnamed one we discussed, that seem poised to fulfill those needs.
Right. So it leaves us with a final thought, something for you to ponder. As AI continues its incredibly rapid expansion, transforming basically every industry and consuming these vast resources, what other overlooked or foundational sectors might be quietly positioning themselves right now as indispensable toll booth operators in this technological revolution?
A good question to think about. Where are the other hidden connectors?